Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a pretty red Friday, which we already went over in yesterday's video. If you missed that, we went over ATVI and Microsoft acquisition, which is a very interesting video. Make sure you definitely don't miss out on that one. In this video, we're going to talk about the other top stocks that we didn't get to in the few other videos. So make sure you subscribe on YouTube. Stay around for the full video because we're going to talk about some amazing stocks closer to the end of the video also. Towards the end of the video, we're going to talk about Manchester United, which is up 13%. The World Cup is going on this week, and they're up 60% just in the past week. Okay, if we scroll out to a 5-year chart, we can see that this is one of the biggest spikes, up around 90 something percent. So after the World Cup starts dying down and the hype starts dying down, we could be looking at a put on Manchester United. But we're going to dive a little bit deeper into that towards the end of the video, so make sure you stay throughout the entire video. Okay, so the first one we're going to be talking about is AMD at $75 per share. Okay, if we go out to the past month, we can see they're up 23%. They were as low as $60 per share earlier this month. That was a strong bottom for AMD, and I think that we will see AMD revisiting that $55 to $60 mark. If we scroll down, we can see that the PE ratio is 45, implying that it's a little bit overvalued. However, a 45 PE ratio for a semiconductor company is fairly reasonable. Market cap only 120 billion. So in the next 5 to 10 years, we could see a 10x on AMD if they do play their cards right. We saw a 52-week high, by the way, of $164 per share. If we read some of these highlighted articles, we can see insider of AMD would have made a tidy sum after selling worth $4.1 million worth of the stock at a high price of over $100 per share. Is the worst over for semiconductor stocks right now in ETFs. Okay, so a little bit concerning on the income statement. Quarter over quarter, we can see that it's going down tremendously from 900 million in profits and net income profits to all the way down to 62 million in the most recent quarter. And if we go to total revenue in the last few quarters, we have seen some growth going from 4.3 billion to 5.6 billion, but we really want to see that net income picking back up the pace. The balance sheet is looking very good, by the way. We can see that the balance sheet on AMD just recently in the past 12 months has been improved tremendously with 67 billion in assets and only 19 or 13 billion in liabilities, making up a 19% debt to asset ratios. Very good balance sheet. No risk of AMD going out of business anytime soon. So this is a great company to be owning for the long term. We just want to see that net income picking back up, and we want to see the balance sheet staying below 20 to 30% on the debt to assets. Now on AMD, we can see that analysts specifically have a 12% upside on average in the next 12 months on AMD. We can see an $84 price target. Right now, AMD is $75 per share. The highest price target is $125 per share, and the lowest analyst has them at $60 per share in the next 12 months. We can see where some of these analysts are coming from. A lot of them are 5-star analysts, just reiterating this in the last 2 weeks. And majority of these analysts are all above $85 and $90 per share. We even have a top 25 analyst coming in at $95 per share for AMD in the next 12 months. Okay, so the next one up is Coinbase at $44 per share. And in the last month, it's down 41%. Just a month ago, it was around $75 per share. We've seen Bitcoin and Ethereum and cryptocurrency as a whole selling off. So if you're a cryptocurrency believer, but you don't want the risks that come with owning things like Solana and Ethereum and Bitcoin, you could dollar cost average into something like Coinbase for long term, because once Bitcoin and Ethereum pick up again, we can definitely see Coinbase exploding back to around $100 per share, $150 per share if we see Bitcoin back at all-time highs, or even if Bitcoin goes to around $40,000 per coin once again. We can see a lot of potential with Coinbase. Okay, now we have a support and resistance between May and November, which is the current date. You can see in this little chart here, we have a resistance of around $90 to $100 per share, and that support is closer to $50 to $40 per share. So right now it does look like we're at the support. We could do a swing trade up. It's a little bit risky with Coinbase right now because cryptocurrencies as a whole could continue to sell off. We can see Bitcoin continue to plunge, and if that happens, then Coinbase stock is going to go further and further down. Obviously, Coinbase makes most of their money off transactions, and if people aren't trading Bitcoin and Ethereum, then guess what? Coinbase is not going to make money. So right now, Coinbase is beat down tremendously because of the bear market. The market cap on Coinbase, by the way, is 10 billion. So that could easily have a 10x if Coinbase becomes the leader in the cryptocurrency space. If we continue to scroll down, we can see that they were a very profitable company in the past. And that's because everyone was trading cryptocurrencies. Even people's aunts and uncles and grandmas were trading cryptocurrencies. So obviously Coinbase was a lot more profitable back then. Now no one's trading cryptocurrency, so Coinbase is a negative earning company. Also, right now with Coinbase, there is a debate going on with how much Bitcoin Coinbase owns, and it is a public traded company, so some of the information you can dive in after this video yourself and see what's going on. Some people are saying that Coinbase owns 20% of all Bitcoin. So you can see how that could be a bullish thing years from now, 5 years, 10 years from now, and Coinbase can shoot back up to $100, $200 per share. But that's only if we see cryptocurrency in the mainstream again, and if we see Bitcoin closer to that $40,000 to $50,000 mark once again. So that's what you're really banking on with Coinbase stock. But you have less risk, in my opinion, investing in something like Coinbase rather than Bitcoin or Ethereum, because obviously, the SEC, FDI insured, none of that stuff is backed up with cryptocurrency. But if it's traded publicly on the stock market like Coinbase, you are backed up. So there is a lower chance of Coinbase going to $0 than Bitcoin going to $0. And the last stock that we'll talk about today is Tesla at $180 per share. We talked about this in one of our last videos, but everyone always wants me to talk about Tesla time and time again. So let's talk about them. They are one of the most popular stocks in the stock market, down 18% just in the last month. Okay, and in the last 3 months, they're down 38%. So this could be a buying opportunity right now for Tesla. So we're going to dive in a little bit deeper to see if the prices are pretty good. So let's dive in a little bit deeper to see exactly what's going on with Tesla here. As we scroll down, we can see that the PE ratio is 56, which is one of the lowest PE ratios for Tesla, implying that it's one of the best prices in the past 24 months. You can pick up Tesla at the price. 52-week high is $400 per share. Right now we have it at over half that. So we've seen Tesla fall over 50% from all-time highs, which could be interesting for long-term investors. In the short term, I think there is more downward trajectory to see, closer to $150 per share or $125 per share. I definitely think it's possible to see on Tesla. Now, if we go to the earnings, the EPS, we can see that they are scattered a little bit, but they've been consistently beating earnings quarter over quarter. So Tesla personally is one of my favorite stocks to own for long term. Some bullish points for Tesla is through the combination of industry leading technology and unique supercharging network, which a lot of people forget that they own one of the largest supercharging networks in the world. Tesla offers the best function of any electric vehicle on the market, which should result in maintaining its market leader status as EV adoption increases. And remember, they're also trying to take over China, Europe, Berlin, all those places right now. Tesla is trying to build factories and get the Tesla cars to the customers in those different regions outside of America. Tesla will also see higher profit margins as it reduces unit production costs over the next several years. Tesla is more than just a car company. They're also a robotics company, an AI company, a solar company, and much more. Okay, so Tesla at $180 per share. Like I said, I want to get that closer to $150 per share or under $150 per share. In the last year, this is the best price you can pick up Tesla currently. So I'm dollar cost averaging in, but I really want to buy heavy under 150 and closer to that $135 mark. And there's even a possibility we'll see Tesla under 135. So set your price alerts. Thank you guys for watching till the end of this video. If you found value in this video, share this video with a friend, leave a thumbs up, subscribe on YouTube with post notifications. If you want to join my close friends list, my private trading group where I post all my trades, hit success number 6, read through some positive testimonials of other success students have had with the program. Just message me here on the Daily Stock Market. Here's my Instagram, 184,000 followers now, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.